Hello, this is John Reardon with Goodfellow Realty. It is September 12th, 2025. This is the September edition of the San Diego Housing Market Update. Let's jump into it. The title of the September edition is Rate Relief Begun. I'm going to start with macro trends to frame up exactly what's happening in the national economy and even global economy to give some perspective on where interest rates are trending. And then we will zoom into the local San Diego market. As far as the macro trends go, we are seeing persistent inflation occur. The current latest inflation numbers coming in at 2.9%. You could see from the chart that back in 2022, we saw levels of inflation hit nearly 9% at its high on a year-over-year basis. That has came off some. However, inflation has been stubborn and now retesting those 3% levels as it currently stands. Jobless claims have been in the news as of late. There's been some recent revisions, massive increased revisions to the latest jobless claims. You could see in that small chart in the lower left showing the latest 12 months. Since May, we've seen a pretty significant spike in those job unemployment claims. And while it's nothing compared to what we saw back during COVID, the trend is running up. A few other economic uncertainties that kind of linger out there for buyers and sellers as I have open discussions are the following: job insecurities, recent layoffs, or potential stagnant wages. Really just a concern of income keeping up with the rate of inflation. Inflation is becoming just a greater and greater issue where your dollar is just worth less. And so if families are not making income that are higher than the rate of inflation, you're actually going backwards. As far as market volatility goes, I think everyone's been watching the stock market hit recent new highs. But there are some growing concerns. Have we peaked with corporate earnings, and is a looming recession upon us? As we tune into the news as well, we see a lot of global political tensions across the world with Russia, Israel, Gaza, etc., including the US, and the effects on how tariffs and business will affect global economy. In addition to that, there's thoughts of AI and how it actually could reduce the number of jobs needed in the workforce. All that to say that it appears that rates are actually coming lower. The 1-year fixed historical view for a 30-year fix is now hitting levels that we haven't seen in quite some time. Now retesting levels of approximately 6.25%. This is good news for buyers. If we look at a 5-year historical view of that 30-year fix, you can start to see just how high that 30-year fix has been sitting at for quite some time. Call it about the last year and a half, almost 2 years, where prior to 22, we were enjoying interest rates as low as, in the high 2s or low 3% range. Even when you look at the FHA 30-year fixed, we're now seeing levels in the high 5s. Although this is certainly positive news for buyers, I would still recommend getting with a realtor, getting with a trusted lender, running the numbers, and understanding your situation to see what your buying power now looks like as far as on a payment basis. Of course, as rates go down, that payment power will go up. If you watch these reports before, you notice that I'm constantly revisiting the market action index. That's the gauge cluster that you see in the middle of the screen. It is rated from 0 to 100. Currently, as it stands this month, we are at 42 out of 100, which And this scale is indicating a slight seller's advantage, seller's market, slight. That is up from approximately 1% from last month, so relatively unchanged overall. To give you some historical context, this is the market action index plotted each and every month going back to 2021. You could see that during the periods of COVID that this market action index hit levels at 100 and sustained levels at 100 for quite a number of months. That was when we saw extreme price growth and scarcity as far as inventory goes. Since then, the market has changed dynamically. We see that market action index plummet down to as levels below 50 and then have retested back up to 80 in middle of 2023. Since then, we've been seeing a consistent up and down, but in general, a downward trend now at that current level of 42. The average number of days on market is ticking up. The current days on market now stands at 67 days on market. As the market starts to slow, it's not unusual for the average days on market to continuously rise. You could see there the 7-day moving average, that dotted line, is at elevated levels to that of the 90-day, which would indicate that this will continue to grow slightly, at least in the near term. As we look at the current inventory levels, we're now sitting at roughly a 5-year high. The last time we were at levels this high, or just slightly lower, we're back in October of 22. So it's been quite some time since we've had these levels of inventory. Just to put that in perspective, this is nothing compared to 2008 when we saw that huge financial crisis. Right now, we've got just under 1,000 homes on the market, and with as large of a population San Diego is, that's not a ton of homes. Therefore, the level of supply and demand dynamics, we could definitely use a lot more inventory on the market. However, when I talk to friends and family, that the first point of discussion is that there's a lot of homes on the market. It's true, it's trending up and it is at higher elevated levels as of the last few years, but the last few years we've seen very bleak, very low inventory numbers. So we're now just getting back to relatively healthy inventory levels, not a huge oversupply. As we look at the price per square foot, this is kind of a good indication of your bang for your buck. Currently, that level is sitting at $760 per square foot. That is trending down since April of 2025, which would indicate a softening in the marketplace. Another indication of softening conditions is the number of price reductions. These are active homes that are on the market that took a price cut while on market. 33% is the current rating, and we have seen higher back in late 2022. That number got as high as just north of 50%, which is pretty significant. And as we retest these levels, we shall see that if the market continues to soften, that number of price reductions will increase higher. This chart indicates the number of properties that are currently getting relisted. Many sellers come to market with hopes that they will sell at elevated levels. However, if they don't get the offer they're looking for, they pull the property off the market or it goes expired. They might relist with the same agent or another agent, and that gets notated as a relist. Here we're showing the number of properties getting relisted, and it could be an indication that sellers are not getting what they're looking for. In this case, 21%, relatively low number. It just shows the importance of really pricing properly the first time and getting it right the first time. so that you don't have to retest the market. Or on the flip side, one could suspect that sellers are not getting the price they're looking for, therefore just taking the home off the market and not relisting. That would represent roughly about 80% of the home sellers that are not actually selling. So to conclude, for sellers, I've got a couple bullet points here. I think first and foremost, this is the type of market that you should only be listing your property if you need to sell, not the type of market to just test the conditions out there to see if you'll hit your number. I think buyers are out there, but they are looking for a competitive home with a competitive price, and they're looking for something that meets all their expectations. The list price is critical to getting it sold in the first attempt. Time and time again, I see folks that have approached me that have tried to sell their home the first time and were given false expectations or just the understanding that they could hit a number that's really not obtainable, and the market data doesn't really confirm that. So be concerned about any agents that promise to get your home sold for above market list prices. This would indicate to me that they're really just trying to buy the listing. And what that means is they just want to put a sign, put a stake down in your yard with their sign, their face, their phone number, just for the sake of marketability. They're not interested in actually getting the home sold and being coming to market at a competitive price. Know your numbers before listing. I think this is critical. You really, before you even get to the table where you're signing a listing agreement, know that you have a seller net sheet in front of you so that you know how much you're going to net and how much you're going to walk away from the net proceeds of the sale should you get the price that it is getting listed and sold for. Analyze your local competition, specifically active listings. Now, any really strong realtor will help you do this. And really, it's just the key to success, right? You want to be essentially the obvious choice for buyers when they're out in the market. Comparing fit and finishes to lot size to location, there's a lot of dynamics around the marketability of each home, and you really want to be able to compare what's on the market versus your home, why it's special, and why someone would be willing to pay your listing price that you want to obtain. Also, some things to think about. Do your current financing have FHA or possibly a VA loan? Well, if it has a low rate, it could certainly be very marketable out there if you were to present it as an assumable loan. What that means is basically someone assuming your mortgage, purchasing your home at your ideal purchase price, but assuming your existing home mortgage at its current rate. Hopefully that rate is attractive enough to where buyers are willing to pay more or at least pay the current list price, but it's just another attribute to stand out from the competition. For buyers, currently the tides are kind of shifting into more of a buyer's advantage. As we saw earlier, the market action index indicated a slight seller advantage. Depending on the location and property, I would argue buyers do have a slight advantage. Well, for buyers, you have to ask the question, why is home ownership important to you? Why do you want to get into a home? Are you currently renting right now? Do you own a property that is less than ideal? Have your lifestyle circumstances changed? Have you gotten married, had a child, or going through a downsize or divorce, etc., death in the family? These are all reasons for folks that might want to think about purchasing or making a large, life change. So I encourage you to give that a hard thought, because you might understand that, are you willing to pay more in comparable rent in order to own? Sometimes when you run these numbers, it's very likely that if you're paying currently, let's call it $3,000 a month in rent, the same property might cost you more to own. And so you have to run the numbers to see if that makes sense to you. Is it important enough to you to own, even though it might cost more than renting? There is a lot of advantages, but there's also some disadvantages to owning, to be quite frank. Connect with a local realtor, have a first discovery call. I think this is critical. Just understanding, I'm biased, obviously, but I think it's really good to just understand the true reasons of why you're interested in buying in the first place, and really just saving a lot of time and headache, instilling confidence in the right realtor to point you in the right direction, to recommend potential good lenders to use, and just really have a good understanding of like what your wants are and what your must-haves are in a home, and really start to narrow down after you get pre-qualified to know your numbers, to understand what type of payment and interest rate offering you might be eligible for. And then you can start to key in on, bedrooms and baths and the types of homes and HOAs that you're might be considering, and start to narrow down location and neighborhood. Potentially that might be close to work or school, or maybe it's just where you spend most of your time on the weekends. And then finally, today is a market where you can be a little more selective, and start to lead those negotiations. For years now, we've been in such a strong sellers market where the market has really lopsided and disadvantaged buyers. I think finally it's a refreshing to see a more balanced market where sellers have to likely lower their expectations, and buyers, they have to come to the table and understand that interest rates are likely not going to go back to 3%. However, uh, start to consider that prices where they are, who knows what will happen. But you have to consider all the options on the table as far as location, price you want to spend, type of home you want, and if it makes sense financially or not. So with that, that concludes the September edition. And if you have any questions, feel free to call or text me with any questions. I'm happy to discuss your real estate goals. Thank you and have a great month.